Look, there's no doubt in our mind that there's a very strong recovery underway, and there'll be, I think, an additional boost as we go into the traditional festive and summer holiday period. That momentum spills over into 22, and the consumer will drive a lot of activity in 22 and what's shaping up to be a pretty decent year and strong above trend in terms of growth. You add to that the potential for upside surprises in household consumption if consumers do draw on that pool of savings, and it does suggest some pretty strong domestic demand. Inflation is already rising. We know there are pockets of pressures. You add a bit more demand to that, and we can easily see core inflation up closer to 2.5% in 2022.
Su-Lin, I do want to get your sense very quickly on what this means for the AUD going forward.
So I think a lot of that depends really on the various interest rate cycles, particularly between the Reserve Bank and the Fed. And I think increasingly, as we heard from Fed Chair overnight, they're getting closer to maybe accelerating taper. That may bring forward the timing of rate hikes there. I think it's pretty clear that Australia, despite this pretty strong activity outlook, will still lag the Fed when it comes to the start of liftoff and policy normalisation. So I think the odds are that the Aussie dollar will still remain under a bit of pressure. An RBA that lags not just the Fed tightening cycle, but the global tightening cycle is part of that story. And really it reflects, I think, an onus on wages and inflation to step up more sustainably. So we think the Aussie dollar does head lower over the course of 2022. We have a year-end 21 target of 72 cents. So we're obviously a bit below that, and a year-end 22 target of 69 cents.